Peter Eliades with you. This is Wednesday, September 25th. This is going to be a long update. There are so many things to talk about today. So if you don't like technical analysis and you don't like cycle analysis, you can wave goodbye and go someplace else because we're going to get into it today and there are a lot of things to discuss. Let's kind of start where we left off yesterday. And again, we apologize. The audio sync, I know, is a lot better, but we may do some pauses as we record this so you won't have to wait around too long while we go from chart to chart. And I think that when you do a pause, it kind of exacerbates the errors in the audio-video sync. But bear with me. We're going to try and get through it all, and there's so much to talk about today. Let's start right here. This is the chart we showed you yesterday where we had broken below both the offset lines and given projections. This is on the S&P futures and the S&P cash, the same thing, between 2902.50 and 2943.75. I think you recall that we told you, however, that doesn't mean step in tomorrow morning and sell short and wait for those prices to be met. We made it very clear that there was a decent chance we could get up to this line or both these projection lines once again, even get above them and invalidate the projection. And that's exactly what happened today. And that's one of the reasons why you have to always stay on top of the offsets. And one of the other things you have to stay on top of, which we have not been doing here because we're trying to keep the updates short and concise, is looking at other market indicators. The Dow Jones Industrial Average did not give this equivalent projection. The New York Composite Index did not give this equivalent downside projection. If we had shown those to you, we would have been extra cautious in terms of coming into today looking for this projection to be met. But as it turns out, we were cautious anyway, and we told you don't jump in the morning and short thinking these prices are going to be met immediately. So the upside projection now has been given, and it calls for 29.99.50, let's round it off, to 30.21.25 on the S&P. So those are the current projections outstanding. There are other shorter term ones, but that's the one on this equivalent offset in the S&P. And we want to look at several other things today. In fact, some other indexes. I think I've said before that when there are questions about projections between different indexes and averages, the one we like to go to, our go-to average or index, is the New York Stock Exchange Composite. Perhaps because it includes all the stocks on the New York Stock Exchange, but it tends to be for us the most accurate and consistent projection generator, and that's the next thing we're going to show you. Okay, this is the most recent projection for the New York Composite Index. This is a daily chart. This is a 7 to 8 day offset, which gives a nominal 20-day projection. Don't let the intricacies of the offsets we talk about and the nominal projections get in the way of what we're showing you. The most important thing is the projections themselves. So let's keep an eye on those. Look what happened, though. Yesterday, we got a nominal 10-day downside projection to between 12,947.80 and 12,997.34. So we drew a line across the bottom side of this projection, and this was today's low. Close enough for you? I mean, really very close. So when that projection was met on the New York Composite, it began to rally almost immediately and closed near the high of the day. So you might interpret that as being potentially bullish. Now, the next offset we're going to show you on the New York Composite is a 12.1 to 13.8. That's the equivalent of a 2.5-week offset, which gives you a nominal 5-week projection. But notice what happened here. And we can zoom in on here too. It's pretty clear the way it is, but let's go in a little closer. And you can see we got nowhere near getting below. This is yesterday. This is today. Got nowhere near getting below. And this is the offset that gave the S&P lower projections in the last day or two. So If we had really been conscientious and looked at all the offsets for the different indexes, we would have told you, we would have been able to tell you that the New York Composite Index had not given an equivalent downside projection. The one that it had given was the one that it met today that we showed you in the other chart. Now, the most important projection charts right now, I believe, are the 5-week offsets that have given nominal 10-week projections on virtually all the indexes and averages. We'll show all 3 of the most important ones to you now. This is the New York Composite Index, the DJIA, and the S&P 500 Composite Index. So let's take a look at those numbers. If you like, you can write them down. There is a nominal 10-week upside projection. This is for the New York Composite Index. When we crossed here a couple of weeks ago, that projection was generated and confirmed. It was initially given with a crossing of the red line, but the crossing above both lines, which occurred on September 11th, confirmed this upside projection. On the New York Composite Index, it calls for 13,476.12 to 13,731.72. Closed today at 13,037.61. So that's the New York Composite Index. That projection remains very well in effect. And remember, the only 2 things can happen to this projection: met or invalidated. How do you invalidate it? You've got to get way down into this area over the next week or 2 in order to invalidate that projection. Let's give you the same projection for the Dow Jones Industrial Average. On the Dow Jones Industrial Average, those numbers call for, don't you love the way the software works and just pops up these somewhat magical numbers for you? I just love that. I used to be able, I always was able to do these projections, but I would have to go to the low and measure the distance from here to there and measure the 2 distances and then make an equivalent line going up to there. Now I just bring the chart up, I click on here, and it says on the Dow, the nominal 10-week projection calls for 28,419 to 28,596.33. Both those numbers rounded off. And just for the fun of it, we'll go to the S&P one, which we've shown you already. If you haven't written these numbers down, or if you're new to our cycle projections, I would encourage you to do that. The projection, the nominal 10-week upside projection for the S&P calls for 3095.35 to 3156.07. Now, again, only 2 things can happen: reaching of the projection in this box, this rectangular box, or an invalidation of the projection, which would require a move at this point well down into this area, which is in the low 2900s. So that's where we stand with the projections. And I think what we'll look at maybe is the very short-term upside projections, and then I have an important technical indicator to show you. As I told you, this will be a long update. Okay, these are our favorite intraday charts, 27-minute charts. This one's on the S&P futures, and let's follow through the day and see how things happen. Initially, we got a projection up to 2984. 36 to 99, that was obviously met. When first projection is met, you take a look at the next longer offset to see if a longer one's been given. And indeed, here is the next longer offset. This one called for 2986.49 to 2989.75. That was met, fully met, a little bit surpassed, suggesting that perhaps even higher projections were given. The next projection chart shows some higher projections, 2996.45 to 2996.45. Actually, as you can see, the crossing of the red and the blue line took place almost exactly at the same level, because the offset line was going, the projection line, the median of the bars, was going sideways at the time, so it crossed above both offset lines at about the same price. So this is the projection you might be looking for tomorrow, 29.96.45 to 29.98.08. Doesn't mean they're going to stop there, but that projection is outstanding. The next projection, look what's happening here. If we get up to those levels, depending on how fast we do it, in the next couple of hours tomorrow, we have the possibility of a significantly higher projection crossing above both the red and the blue offset lines here. So where do we stand in the overall picture? I'm going to show you a technical chart, and again, I kind of told myself I wanted to really concentrate on the projections for these video updates rather than some other technical work. But there's something really important happening technically. It's one of my own original indicators, and I'd like to discuss it with you. So I'll be right back. Okay, here's my next chart. It's a pretty busy one, but it's a daily chart that goes back 70 years. So there's a lot of data in here. Let me tell you what it is. This is a daily chart of the Dow Jones Industrial Average on a logarithmic scale. Otherwise, this period here would all look very flat all the way over. You can get a concept of what kind of moves occurred in the Dow by looking at a logarithmic chart. This is, I'll give you the fancy name first, the CI-NCI indicator. Long ago, quarter of a century ago, I came up with a concept of measuring cycles in terms of advances and declines on the New York Stock Exchange. And according to Hearst, one of the most important cycles is a 78-week cycle. So I'd narrowed that down to 189 trading days, as close as I could come to 78 weeks. And what I did was I calculated the number of advancing issues on the New York Stock Exchange over 189 trading days. Then, in order to keep a consistent measurement that would be done in terms of a ratio rather than an absolute number, because as you know, the number of issues traded on the New York Exchange have changed drastically over the last 25, 30, 40 years. But if you use a ratio, those numbers can always be compared. So I looked at 189 days of advances, added them up. Then I added the advances and declines for the 189 days, divided it by 2 to find what a neutral reading would be over that time sequence. Then I took the number of advances over the 189 days, divided by what the neutral reading would be, and that gave me what I call the CI-NCI ratio. Cycle indicator, neutral cycle indicator, NCI ratio. That's what you're looking at in the red here. Something remarkable has happened over the last week. Over the last week, we've gone up to a reading of above 1.09 on the CI-NCI ratio. That very, very seldom happens. Here's the history of the last 70 years. These times we got close. These are the very few times we got up there. This is back in 1949-50. This is in 1982-83. This is in 2003 or 4. And this is in 2009 or 10. Virtually all of those places were kickoff moves to the upside. Look, follow these vertical lines down. This is where this one occurred. This didn't quite get there, but got close, but that's where it occurred. Didn't quite get there, got close, that's where it occurred. This one did get there. This is where it occurred. Somewhere near an important market top? I don't think so. Okay, this is the one that we can claim suspect to what we're looking at now. This happened on April 24th of 2007, a reading of 1.090 on the CI-NCI ratio. Since that time, in 07, the only time we've come close to this line has been in 2009, 2010. And look what happened after that. That was a kickoff move to the upside that sent the market up for the next 9 or 10 years. Well, here we are right now, right in this section right here. We are up to this horizontal line. So if you want to be a bear, and I'll tell you, my bones are bearish. But when I look at this, I say, let's be careful here. Let's respect history. Let's look at what's going on. This is an incredibly high reading, and it tells you the momentum of the last 9 months has been very high. How long ago was 9 months? That was the December bottom. So from the December bottom, if you measure these advances, we've shown the type of move that happens very seldom historically. The takeaways now for the 9 months are going to get very high. So chances are this reading is going to top out right around here and start coming down. But in terms of technical power, the power has been shown. And so it would be very, very unlikely that this would mark any kind of exact market top as it is happening. The closest thing that we saw was back in the 2007 area, when in April we came very close to getting up to that area. We got to a 1.090. And as you can see, we faced one of the great bear markets of the last 75 years. So I wanted to show this to you to let you know that an extraordinarily powerful signal has been given. Chances are, well, you don't top immediately. The best you can hope for if you're a bear is for prices to get up perhaps to the projections that we've shown you. And at that point, if the CI-NCI ratio has come down, then we could be looking at something a lot more potentially dangerous. Doesn't seem to be here yet, though. Thanks for watching. Bottom right of the screen, subscribe. You will be apprised of all the updates that we do. And we're looking for more subscribers. Tell your friends, tell your brokers, tell anyone interested in the market about these updates. I know this has been a long one. I apologize for that. I hope the audio didn't get too far out of sync with the video. Thanks again for watching, and we'll talk to you tomorrow.